Okay. Good morning, everyone. It is my pleasure to welcome you all to the Valuation Manthan webinar session 33, organized by Valuation Standard Board of ICI. I am CA Asma Gulati and I will be serving as the moderator for this session. Thank you all for joining us today for the insightful webinar on value unlocking of SME through IPO. Before we dive into the enriching discussion ahead, I would like to express our gratitude to our distinguished chairman CA Hansraj Chuk sir and vice chairman Preeti Savla ma'am for organizing such insightful session for us today. For us, due to some prior commitments, our chairman and vice chairman may not able to join us today. We can forward this webinar. I am honored to take on the role and I'm excited to facilitate the engaging session where we will be exploring the fascinating realm of valuation and financial expertise with our distinguished faculty, Mr. Sandeep Kothari and Mr. Aman Singh Bhadoria. Throughout the session, I encourage active participation from our audience. Also, we have last 15 minutes reserved for our questions and insights. Your active participation is crucial, so please feel to share your queries and thought. Without further ado, let's turn our attention to the esteemed expert who will be guiding us through today's discussion. First up, we have Mr. Sandeep Kothari, a seasoned professional with a wealth of experience in the financial realm. Sandeep is not just a chartered accountant but also a register valuer and insolvency professional based out of the vibrant city of Chennai. With over 14 years of professional experience, Sandeep's expertise spans the entire spectrum of valuation. He is recognized authority in the field and has been a regular speaker and visiting faculty at top register valuer organizations. Sandeep brings a rich blend of skill with a focus on equity valuation, startup valuation, ESOPs, insolvency professional valuation, and portfolio valuation. His contributions to the ICSI RVS publication, guidance not on preparation of valuation reports, underline his commitment to the advancement of the valuation profession. Next, we have Mr. Aman Singh Bhadoria, another distinguished chartered accountant with a diverse financial expertise that sets him apart. Aman specializes in SME IPOs, business valuation, financial due diligence, showcasing a versatile skill set that includes project financing, deal advisory, and restructuring. Together, Sandeep Kothari and Aman Singh Bhadoria bring a wealth of knowledge and practical expertise to our webinar today. We are fortunate to have them guide us through the complexity of valuation. Please join me in welcoming our esteemed faculty for today's session. Welcome, sir.
Thank you, Asta, for the kind introduction. And at the outset, I would also like to thank the Institute, the Valuation Standards Board, and CA Hansradji and Preeti Madam for giving us this opportunity to speak on this forum. And when the Valuation Standards Board, first of all, approached us for this particular session, and we realized that this is going to be 33rd session, we were actually wondering when already 32 distinguished experts have spoken on the areas of valuation, they would have definitely covered entire nook and corner of this world of valuation. So, what is that we could add further to the audience? And then we realized that also this is a forum where not only valuers but even chartered accountants and other professionals would be joining. And we deemed it fit that we can talk of this topic on how do we help SMEs and MSMEs and SMEs in unlocking their value. Because as financial advisors and consultants and professionals to these entities, we are very closely associated with these entities and they look forward, they look up to us, in fact, to guide them on their journey towards success. So we thought this would be a good topic, would enlighten the fellow members on how we could actively take part in not only valuing the entities, but also in unlocking value for the entities. And that's the idea behind the topic today. Let me share my screen. And I would also welcome all the audience and fellow members for taking out time on this Sunday morning, joining us here today to encourage us. Thank you very much and welcome to all. I hope my screen is visible.
Yes,
It's
visible.
visible.
Yeah.
Let's look at the agenda for today's discussion. This is the session outline that we're planning to cover today in the next 2 hours. We'll start with looking at the important role that play in the development and growth of the economy. And then we'll look at what are the challenges that are faced by SME, what kind of challenges they face, which restricts them from unlocking their true value. What is the current funding landscape across various types of corporates in the country? And we'll look at how the SMEs could actually explore this option of SME IPOs and unlock the value using this particular option. How does it benefit the company and how does it benefit the promoter by availing of this opportunity? And then Aman will be speaking about the qualifications and criteria for SME IPO. This is particularly important because if we really want to filter out good companies which to whom we can actually go ahead and advise on these areas. We need to be aware of what are the qualifications or minimum requirements that a company should meet to be able to go ahead with this process of SME IPO. So Aman will be speaking about that. He'll also take us through the process and the timelines of the IPO and much more nitty-gritties around the IPO related aspects and how do you actually prepare an entity for this entire mega event called IPO. Finally, he'll touch upon the opportunities for professionals like us in the entire IPO process. How could we add value in this process, and what are the opportunities that we have? How could we unlock our value as part of this value unlocking of right? And towards the end, we'll also take up any Q&As that you have. So I think there's an option to put your questions. You can post your questions in the option, and we'll take up the questions as per the available time towards the end of the session. So let us understand the role that these SMEs or MSMEs, as we call them, play in the growth and in the economic development of the country. If you look at the MSME sector, it has emerged as a significant contributor in employment generation and exports, and a bigger part in the inclusive growth of the economy, because these are the entities that touch almost every life or every person in this country. So they play a great role in inclusive growth of the entire economy, entire country. And as we rightly say that MSMEs are the backbone of the socio-economic development of our country, which is also backed up by the fact that they account for 45% of the total industrial production and 40% of the total exports that we do. That's the kind of contribution they make to our country. And if you look at the contribution of SMEs to the GDP, it is 37.54% of the GDP, of which manufacturing contributes about roughly 7% and services contributes about 30% of the GDP, right? So that's the significance of MSMEs in terms of economic contribution and also in terms of the inclusive growth, which is something that is very important as a nation for us. And also that we have a aim to reach the 5 trillion economy, 5 trillion GDP, and also to get into the top three economies by, as guaranteed by our Prime Minister, that in his next tenure, he aims to take us into the top three economies of the world. So that is something that MSMEs is really going to play a vital role in that entire process. Having said that, we also see that there are several MSMEs that really struggle to scale up. They struggle to survive, in fact. So let us first understand what are the challenges that these MSMEs face, and then we'll see how these challenges could be addressed. So, of course, many of these challenges is something that as professionals we will be aware of, very much aware of. But I just thought to quickly summarize this and set the context for our further discussions. So let's look at some of the key challenges that these MSMEs face, which prevents them from unlocking or unleashing their entire potential and to unlock the value as a result. So the first and foremost challenge that typically we see is the lack of forward planning. The problem here is on two sides. One, the entity either fails to plan properly about the future growth or future path that they want to take. How do they want to grow? Which are the markets that they want to target? The business goes on, but without a proper plan and proper layout of the future. The other issue is on the reverse side, where they become very over optimistic. They overestimate the growth potential of their business and start adding a lot of capex, lot of capacity, which they might not be in a position to utilize. So this forward planning is quite an essential part. Takes care of the operational risk which an entity would face, and a good forward plan would essentially help them to avoid an operational disaster. The other point also that you can see is the failure to adapt, and we know that the technology is changing quite rapidly, and it is essential for these it is also to keep pace with the economic and technological changes. They need to adopt the technology because if you do not adopt technology, it's very easy to become irrelevant in today's world. The second aspect, which again hinders their growth, is the financial difficulties. And here we see that it is lack of capital, which is the key sort of a stopper for them to go that entire growth potential. Difficulty in either securing loans or investments for future expansion, technological upgrades. So capacity additions and technical upgrades do require a lot of funding. A lot of investments need to be made, and as individuals or as a set of promoters, the directors and the promoters have their own limitations on how much they can bring in. And when they really go out for seeking funds for these future growth plans and future expansions, they struggle to get the required funding at terms that are beneficial for them. That is one. And then there's inherent issue with the way many of these MSMEs operate, and that is with the cash flow problem. So we see that a lot of these SMEs have huge amount of their capital, huge amount of their money tied up in the working capital. While they do make good revenues and they make profits as well, but the issue is that the credit period is many a times very long, and also there's a lot of money that gets locked in the inventory. So these are other issues with the cash flows. We could say ineffective management of the cash flows, which hinders their real growth and real potential. Limited resources to cover the operational cost. This typically happens in the initial stages when they need to invest a lot, not only in the CapEx, also in the OpEx side of it. Apart from this, there is intense competition, particularly we know in our country where there is a lot of price sensitivity among the consumers. So there's an intense competition, and larger players with more resources, they generally dominate the markets. They try to overshadow the small businesses. They try to engage in price wars and try to eliminate the competition. This again becomes a challenge for smaller MSMEs who do not have the financial flexibility, the financial strength to deal with such an intense competition. Right? The another problem that they might also face is the challenges in marketing and advertising. This remains an area which is not fully explored by many SMEs. They do not really go and target the audience in an effective manner, and the advertising strategies are also not in a effective way they should be to get the larger market share. This is another issue. The last set of issues are the operational challenges, where the management tries to handle everything on their own without taking appropriate resources, hiring of good resources, and delegating tasks to them. They try to become the sole runner of the show. And that again becomes a challenge because in today's world, we know that there are so much complexities involved in business, and it is not possible for an individual to run the entire show, to manage the entire show. So as a result, many a times they also end up neglecting the customer feedback, customer service, which again we know is a vicious cycle and would result in hit on revenues and profits. Finally, there are some external factors. So in terms of economic downturn, regulatory changes, and supply chain disruptions. So with SMEs, again, this is a problem because most of the SMEs have a limited set of suppliers, and also many of them have a limited set of customers. So that again becomes a challenge. So if we look at the broader set of challenges that we have discussed, and then we go and try to see how someone can address these financial difficulties. Because if the companies have a good financial flexibility, if they're able to raise the investment, if they're able to raise the money that they need to invest in the business, except for these operational challenges which requires a planning, the other issues probably could get sorted out with enough financial flexibility. If they have good financial strength, they could withstand the initial competition that the dominant players would try to put them into. They would be able to frame adequate marketing strategies and go and do effective advertising and marketing. Similarly, they would also be able to hire good resources and delegate tasks to them so that the business grows. Business has all the engines firing, basically. So, a financial strength, the ability to take out the ability to raise appropriate funds, be able to invest in all of these areas becomes a crucial challenge for these MSMEs. And let's look at the financial landscape that we currently see in our country. So I have just broadly divided this entire funding landscape or financial landscape in our country into three. How startups go about their fundings, how SMEs go about it, and how large corporates typically deal with their funding requirements. So if you look at the business proposition, in case of startup, what drives the value or what is the core or moat of these startups? The innovative ideas, and most of the times these entities are business disruptors. Whereas if you look at SME, most of them are into traditional businesses and If they play out well, if they play well in their game, they could become the potential growth engines for future. Large corporates, we know it's a proven business model. They've sustained through the good and tough, good and bad times, and they have a business model which is time tested now. How does the internal accruals scenario look like for these different entities? In case of startups, we know that most of the startups in the early stages, they are burning cash. They hardly have any internal accruals. Uh, Most of them at the operating profit level would be incurring losses. They'll be doing a cash burn. That's how the startup's internal accrual scenario would look like. In case of SME, we have discussed this point briefly earlier. Most of the times we see that while they do generate cash, but most of the cash gets locked in the working capital, in the receivables, in the inventory, and that is what curtails their internal accruals from getting deployed for growth. On the large corporates, they have healthy internal accruals, not a challenge for them. If we look at how the external funding happens, how do these entities actually raise money? In case of startups, there is a good ecosystem of angel investors, VC, and private equity investors who are willing to fund innovative ideas, business disruptors, in spite of the risk that they are inherently having, right? So, if they have a good idea, there are enough investors who are willing to put money into these companies. That's their way of raising funds. In case of SMEs, most of the scenarios, what we see, most of the companies that we see, they are typically tilted towards debt. They go to the banks to borrow money. So their financing needs are tilted more on the borrowing side rather than on the equity side. In case of large corporates, on the other hand, it is more of equity. Now we know that while debt is a capital which comes at a lower cost, for an entity to maximize its value, it is essential to have a fair mix of capital structure. It is essential to have a capital structure, a good mix of debt equity, essentially, which maximizes my value. Because even a higher debt, higher leverage is considered to be risky. It curtails your financial flexibility, which is very essential for your future growth. Right? So equity we see is remaining unexplored for these SMEs. Well, there's also a small disclaimer that I've put over here in the box at the bottom that if equity sell-off happens at a very early stage, then that is also a bad idea because that's the most expensive form of capital that the founders own or the management owns. And if you give it away too early, then perhaps you might not be able to get full value for it. So these are the areas, in fact, where we as professionals need to play a role. We need to guide these entities. What could be the optimal capital structure? How could these SMEs try to achieve? How to attain those optimal capital structure levels? Is this the right time to go for an equity raise, or they still need to do some bit of homework? They need to cover more ground before they actually explore this option of IPO. This is where we need to come in. But the important question is, while we are suggesting that SMEs should go and raise equity along with the debt that they're already doing and have a good capital structure, the question is there a demand in the market among the investors? I want to raise equity, but are the investors willing to fund me? Would I be able to raise it successfully? To answer that question, others covered this this slide on how the SME IPO scenario has been unfolding in the country over the last few years. So it was in 2012 that BSE and NSE launched separate platform for SMEs to get listed. Aman will be speaking in more detail about these platforms and how they work. But there are separate platforms on which these SMEs can get listed. And it has resulted in 850 SMEs listing on the exchanges. So from 2012 till today, we have seen that 850 companies have come out with IPOs and they've listed on these exchanges. In 2023, that was the record year for SME IPOs. 150 plus out of the 850, 150 SMEs have come out with the IPO in this year 2023, and which is three times the number of IPOs that we have seen on the main board. So last week perhaps was the hectic week for the IPO, and we've seen so many IPOs opened and huge amount of money being locked by investors in those IPOs. So similarly, if you see for SMEs, 2023 has been a blockbuster year, and the IPOs have been 150, and they've raised nearly 4,300 crore through these IPOs. Now, surprisingly, the distribution of these SME IPOs is not spread evenly across the country. If you see, Gujarat and Maharashtra account for over 58% of all the SME IPO listings. So 60% roughly is being the IPOs are being come out. Companies are coming out with IPO from these two states of Gujarat and Maharashtra. So that also indicates that there's a huge untapped potential across the other states where the companies can be educated about this opportunity that they have, and they could be taken to this journey of IPO. So we have a lot of untapped potential, as clearly evident, because only two states are accounting for a majority of the IPOs that have come over the last years. The quantum of oversubscription, so if we were to go by this indication to understand the kind of demand that SME IPOs are getting in the investors community, have a look at this chart here on the right hand side. This chart tries to tell us for the IPOs that have come from Jan 2020 onwards, the kind of oversubscription that we have seen among the investor community for these particular IPOs. If you see, these are the oversubscription numbers here. Some of the IPOs have even got oversubscriptions of around 700 times. And then there are IPOs which have got oversubscription of 300 times, 200 times, 100 times, etc. So, and to put this into context, of course, the size of IPO of Tata Technologies was quite huge, but Tata Technologies was oversubscribed 70 times. And here you see there are IPOs that easily get subscribed over 100 times. One reason is also because the size is small, but it also tells us that good companies are getting a good response in the investors community. So that's something that again is a very motivating fact for us professionals to guide the entities which are eligible, which would be able to grow multifold, manifold with the IPO proceeds to take them through this journey. So that's the kind of oversubscription and that's the demand that we see in the market. And in fact, out of the maximum oversubscription in the top 20 maximum oversubscription that have happened till date, 10 of them were the IPOs that hit the market in 2020. So we are in a sort of a time when SMEs are able to raise funds at a very good terms and with very good demand from the investors. How does this benefit to the company? While yeah, we know that we need to raise equity to probably make our capital structure more value maximizing, and also there's a good demand in the market. But what are the real benefits that the company get by going for an IPO? The first and foremost is the access to capital. So we know that when we want to achieve this target of 5 trillion economy, that's not going to happen without capacity expansions and without investments in technology. So if we have good access to capital, easy access to capital, which we see is happening now, then companies will be able to infuse that money in their capacity expansion to serve more and larger clients. In fact, many of these SME IPOs, because I generally study their annual reports and quarterly results, we have seen that before the IPO, they were actually facing capacity constraints. They had orders in hands, but they were not in a position to fulfill those orders. So that is again something very positive. And if you're able to raise the right amount of money, good terms, you would be able to invest in these capacity constraints and get the capacity right, and thereby boost your revenues and profits. So you can invest one in the capacity and second also in the technology because the technology upgrades is very essential today and it's changing at a rapid pace. And the customers also are very demanding in terms of the output that companies can give. So investments in R&D, investments in technology is extremely important. The other benefit that you also get is you're able to reduce your debt and improve your financial health when you get access to such equity capital. You're able to get the right capital structure and as a result improve your financial health. We also get enhanced visibility and brand recognition. So this is an added advantage going for an IPO because many of these companies that we see today in the SME markets whose shares are firing like anything, whose revenues are growing like anything, they were names that were unknown till now. So when you come out with this sort of an IPO, it also brings a lot of visibility and a brand recognition in the market. There are many who recognize you. There are many who know you better, and that actually makes it easier for us to go and do better business partnerships. So the challenge that we were talking about, a limited set of customers, limited set of suppliers, that can also be overcome when we have a good visibility and brand recognition, and we have better terms of dealing with the customers, suppliers, etc. And also because there is a lot of transparency that comes with a company going public, that gives a lot of comfort to your customers as well in terms of their reliance on the company. So you get a better audience reach, there's customer attraction, you can do stronger business partnerships because of this improved visibility and brand recognition. Another important aspect is there is a liquidity that the existing shareholders get because many of the initial shareholders they would struggle to get an exit for the investment that they made if at all they want to take out some part of the money. An IPO would also provide them liquidity, and it will help them to realize the gains which they would the hard work that they put for so many years. It also helps the founders to diversify their own wealth. So typically, what would happen if I have a company? Most of my wealth would be locked in that money. Most of my money would be locked up in that company. I would have invested my entire wealth in that company. Now, with the SME IPO, there's a possibility to take out a part of that money that I've logged here and deploy it elsewhere as well. So it helps you to diversify my risk. It helps me to explore more opportunities for wealth creation as a promoter. It gives exit for the early investors. There are many investors would have come in at early stage. In case they want to exit, IPO would also help them to get the required exit. It becomes a currency for mergers and acquisitions. So this is another important aspect of IPO. Once the company gets listed, it becomes easier for them to use their shares as a currency for mergers and acquisitions. If they see the growth potential, if they want to work inorganically, and they have good target companies in mind, it gives them an advantage because the company's shares are listed. So there is one set of negotiation is freezed. They don't have to really fret about what will be the valuation that their company shares should have because that is already there in the market. It's a currency, accepted currency now. So the only thing that needs to be addressed is the value of the target. And then they could actually pay the consideration by way of shares because that will be more acceptable to the target now. Company is listed and the prices and the market cap can be easily seen by anyone. So it becomes the acquisition currency and as a result simplifies the entire M&A process and stock can be used as payment, gives a strategic advantage to the company who is listed. Employee incentives. So while ESOP is something that even private companies do, but the advantage of giving ESOPs in case of public companies is that the employees are also able to see the extent of wealth that they are making when the company is growing. In case of private company, while you might give them ESOPs and make them part of the growth story of the company and reward them for the growth of the company that is happening because of the employees, but the clarity or the visibility on the value that they are getting out of the company's growth is not clearly evident. So that happens when the company gets listed and employees are able to see that, okay, these are the ESOPs that I have. And if I see that what's the market price of the share, and I've got this amount of wealth because of the company's growth, and it motivates them further to perform well and make sure that the company does better and the share price increases, and as a result, their wealth will also increase. So this is another benefit of going public. Well, and valuation and benchmarking. So once you've gone public, the valuation is known to everybody. You have a market valuation that could be used, and the performance also gets benchmarked. So even for the company, it becomes a sort of benchmark because if they see that investors are not rewarding the shares well, then it means that there's something that they need to work on in the company. They need to improve on in the company so that investors recognize and reward the company's performance by reflecting it in share prices. Also, IPOs will help you to get access to a diverse set of investors. You would not have to restrict to one set of investors, which in fact might also curtail the control of the promoters on the company. When you get diverse set of investors on board, it helps in many ways and it increases the liquidity, provides a stability in shareholder base, and also helps you to retain your control over the company. So what we've seen are the benefits that companies get because of the SME IPO. On the other side, there are also some great benefits that the promoters would achieve if their company list. So let's look at some of them. The first one is unlocking of wealth. So as we discussed, most of the investment of the management of the promoters would be locked in this particular company. And when it goes and lists, they unlock their wealth. They tap the value created with decades of hard work. The hard work that they put in for the years gets validated by the markets also, and they're able to see their wealth grow phenomenally. So promoters' net worth it increases radically. There's a phenomenal increase in their net worth because when the company shares this, then obviously there's a easy way to compute their net worth, and we see a substantial increase in their net worth post IPO. It also gives them liquidity. They can sell the shares in the market easily. They don't have to go and struggle with finding out buyers for their stake. They can sell the shares, and if they want, they can diversify their risk, as we discussed. They do get social recognition as well. So that's something that is important for many. So social recognition of promoters it also increases by being called as promoters of listed company. So these are the broad set of benefits that we can see for the company and also for the promoters of the. So with this background, now that we know the importance of SMEs and the benefits that they could get out of IPO, it is also essential to understand what are the eligibility criteria so that tomorrow, if we want to advise any company on it, we have a sort of checklist with us that, okay, these are the minimum requirements, and that would help us to also guide them well, to advise them well, and make sure that only the right set of companies go for the IPO. Right? So I'll hand it over to the to Aman, my friend from GYR and fellow member, take over the topic from here and share his insights on the criteria and the eligibility and the process.
Thank you so much, Sandeep ji. So, first of all, very good morning to each and everyone. Thank you for taking out time and joining on Sunday morning. Uh, so, I would like to begin my session by one of the utmost prominent investors of the global economy of the Charlie Munger. That the best thing about a human being is that he can help the other human being to know more. With that kind of a belief, let's start today's second phase of the session, where we will be going into much deeper insight of what exactly are the eligibility criteria of SME IPOs and what do they need and what is the entire process that happens to bring out the IPO. Now, I would like to share my screen. Just give me a second. I hope my screen is visible. Okay, thank you so much. So, starting from the eligibility criteria, I want all of you to pay a bit detailed attention here because this is one of the prominent questions that each and every individual or professional have. That what does it take to get the company eligible for listing process? Usually, if I talk about the main board, people have a sort of a mindset that it is very tough to get yourself listed. You should be a very big organization, your financials should be fantastic, and all those things happen. But if I talk about SME segment, there are very relaxed eligibility norms that have been prescribed by the SEBI along with the exchanges. The sole reason of doing it is providing the SME the right amount of support that is required for them to get itself listed and growth trajectory पे आने के लिए. So if I talk about the platforms that are present as of today in the India, so there are two platforms, NSE Emerge and BSE SME. So basically, both the exchanges, both the prominent exchanges of India, BSE and NSE, have created separate platforms for the SME companies, and they are called as BSE SME and NSE Emerge. So let's see what is the eligibility criteria that is required by a company to fulfill to get itself listed on NSE Emerge platform. Yeah, so the following is the list of criteria that are required to by the issuer company to fulfill. Uh, the first one goes for the incorporation. So this is a very preliminary thing that the company should have been incorporated under the Companies Act 1956 or 2030. This is a very basic criteria to be fulfilled. The second criteria is one of the essential criteria that the post-issue paid-up capital of the company. Remember, we are talking about post-issue paid-up capital, not the entire shareholders' fund, including reserves and surplus. So the share capital of the company post-issue should not exceed rupees 25 crores. So what does it actually implies is that there is no minimum criteria for the post-issue paid-up capital, but yes, there exists a criteria for post-issue paid-up capital as a maximum limit. So that is something that you have to meet. Now, if I talk about the track record, so how long should the company be in existence? So the NSE says that the company should be in existence for a minimum period of 3 years, and out of those 3 years, the company should have positive operating profit and positive net worth in at least 2 years out of those last preceding 3 years. So you can see here that the minimum 3 year track record is required with at least 2 out of 3 preceding financial years showing positive operating profit and positive net worth. Then there are some basic listing conditions which comes along with the criteria that are like that the company should not be involved in the history of any insolvency. There should not be any resolution passed and application should be made for the BIFR, that is Board of Industrial and Financial Reconstruction. There should not be any winding up petitions filed by the company or any regulatory actions taken by SEBI in the past 3 years when the application is being made by the issuer company. One of the criteria that NSE Emerge has put here is the cooling off period. So, what exactly is cooling off period? Let's understand it in much of a detail. So, cooling off period is basically, let's suppose you filed your application, the draft offer document on 1st of April, right? So, once and your offer document, because of some reasons, have been rejected by the exchange. So you have to wait for complete period of 6 months. And once that 6 months period is passed, you are again eligible to apply to the exchange. It is just that you have to make sure that now your eligibility and whatever the observations that were existing in the previous time of the application are completely fulfilled now and amended as per the laws and regulations. So this was the NSE SME eligibility criteria. You must have got an idea by now that there was nothing as such that was big enough for that the company will would not get itself fulfilled to just get it them listed. Now let's go towards the BSE SME eligibility criteria. Talking about the BSE SME eligibility criteria, although the criteria on both the exchanges are pretty much same, but there are 2 to 3 changes that have been here in the BSE SME or additions. Let's directly go to the addition part. One such addition is that the net tangible asset should be rupees 1.5 crores. This condition does not exist in NSE Emerge, but yes, this condition is present in BSE SME platform that the net tangible assets of the issuer company should be rupees 1.5 crores. Now, if I talk about the track record part is same, but there is again an addition or modification here. The first one being the company should be in existence for 3 years, and if the company is not in existence of 3 years, but still it wants to, bring its IPO proceeds, IPO, it can. How? So, in case, let's focus on the second condition that has been present in the track record. In case it has not completed its operation for 3 years, as in the company is not in existence for 3 years, the company should have been funded by either the bank or the financial institution or central or state government. And here, another condition which is being mentioned here is that the group company should be listed for at least 2 years, either on the main board exchange or the SME exchange. And if on any of these four criteria are eligible and the company is not in existence for 3 years, still the company becomes eligible for getting themselves listed on the BSE SME platform. Another criteria that gets added here is the company or the firm which gets ultimately converted into a company to bring out the IPO, as that is the preliminary condition. It should have a positive cash accruals, that the EBITDA should be positive in any of the 1 year out of the last 3 years whose financials we are going to present in the offer document. And the net worth of the company should be positive. So these are the criteria that are required by the issuer company to fulfill for getting themselves listed on the BSE SNA. Now, I hope you got an idea that what the eligibility criteria of are both the exchanges. Now, let's move ahead. So there are some other conditions for the IPO. If I go in a bit of detail, so what actually happens is while you're making an application to the exchange, so-called the offer document, you have to give it to the exchange, and then the exchange gives you an in principle approval. So the once the in principle approval arrives, you're basically confident enough now the IPO has been approved by the exchange and the process could be taken further. The second point, which is a very generic point, that the company shall enter into an agreement with depository for dematerialization of security. So what has been happening till now in private companies or unlisted public companies, the share are not in dematerialized form, but as per the for bringing out their IPO, the company shall have to enter into an agreement with registrar and share transfer agent, and the RTA will make sure that all the shares of the company that are existing are converted into dematerialized form. And there also is an amendment now, and all the private companies and the unlisted public companies now are being required to maintain their share in the demat form. So certainly these two conditions will automatically be complied with. Now, another condition which is required to be fulfilled is uh, in case the company is having any partly paid up shares in their balance sheet or in the share capital, the company will have to make sure before making an application to the exchange that either they are fully paid up or they get forfeited. So the entire concept what the exchange is trying to convey here is that there should be no partly paid up shares standing as on date when the application is being made to the exchange for bringing out the IPO. Now, if I talk about the other condition, and which is one of the most prominent conditions, and a doubt which usually comes to people's mind, that what exactly is company gonna do by raising that much amount of funds, or is there any regulation about where it should be used? So yes, there are prescribed regulations regarding it. If we go towards it, the first goes is at least 75%. Remember, it has a minimum criteria that minimum 75% of the stated project financing must be verified. That just means that for whatever purpose the issue is being made, minimum 75% of the fund should be used for that purpose if the purpose is predefined. And the other concept is the remaining 25%. That is maximum 25% is the upper limit. That maximum 25% can be used in the general corporate purpose, which certainly means the day-to-day working of the organization. So let's suppose if the company wants is bringing an IPO of 100 crores, okay, and the company's object of raising the funds was to acquire any company. So the company can have to make sure that minimum 75 crores of the funds raised has to be invested in that for acquisition purpose, and maximum 25 crores could be used for general corporate purpose, or no funds could be used for general corporate purpose, and all the funds could be used for the acquisition purpose. So these were the few other conditions that are required in the IPO thing. So what I've told you till now is basically the eligibility criteria and conditions that are required to be fulfilled by the issuer company for bringing out their IPO. Now, while going ahead, we'll see exactly how IPOs work. What is the entire process? Nowadays, people have a lot of queries as to we are seeing that IPOs coming are Zerodha, we can see it, but what is the background story of it? How exactly things happen? What is the flow that gets created? So that is what we will talk about here. So primarily, there are 5 P's of listing process. I'll be sharing in a gist about the entire 5 P's, and then we'll enter into a very deep flow of the entire IPO process. The first P goes for the planning part. The second, preparation. Third goes for the process, where the entire IPO process gets carried out. Then fourth goes for the public offer. The public offer is the period for which the shares are being opened for subscription by the investors. Fifth goes for the post IPO closure. And now post IPO closure basically is once the offer period gets ended, the various activities that gets happened as in the share allotment and all of those stuff gets covered here. Now, if I talk about the planning aspect, let's suppose company X is planning or thinking about bringing their IPO. So how exactly things gonna work? So company X is going to first consult to a merchant banker, and then once the merchant banker is done with its own due diligence that they are very much confident about bringing the IPO of the organization, the merchant banker gets appointed in an advisory capacity. Then what happens is the preparation. What includes the preparation? Preparation includes basically the due diligence that gets carried on, preparation of basic IPO documentation, any transaction restructuring or pre-IPO activity requires to be carried out that gets carried out here or planned at least. And then once each all of these things are prepared, we start the IPO ultimate process. So in IPO process, the first thing that happens is once every sort of due diligence and documentation is done by the merchant banker, so-called book running lead manager (BRLM), then the draft of a document gets prepared. Draft of a document gets verified and has to be submitted to the exchange, and they verify it, and then other sort of process gets started as in prospectus filing, other filing of documentation that are required by the exchanges, SEBI compliances. Then once all of these things are done, every sort of approvals have been received, the offer gets opened for subscription to the public. And then the offer is open, public or the investors put their bids for getting the allotments. And then once the public offer period ends, then comes, as I just told you, post IPO closure. So in post IPO closure, what happens is the basis of allotment gets done. So there are rules and regulations prescribed by the SEBI in their issue of closure and disclosure issue of capital and disclosure requirements regulation 2018, that how exactly and in what percentage the shares are going to get allotted to different categories. And this gets certainly approved from the exchange, and then the other documentation process gets carried out, and the share get ultimately get listed in the stock exchange. Now, these were the basic 5 P's that are involved in the entire listing process. Now, let's get into much of a detail of how the flow looks like for the complete SME IPO of any company. Now, if we talk about what are the steps involved, how from from right from the scratch, what happens? So, what happens is the merchant banker, the so-called book running lead manager, let's call it MB from now. It is going to have a meeting with client where we are going to understand the business of the company, how the company operates, what are the competitive advantages of the company, how the financials of the company are they strong enough to bring the IPO? Is the IPO size right for the company? All of these things happen. And once the merchant banker, as in us, we get confident on these things, ultimately a mandate gets signed between the merchant banker and the issuer company. Once the mandate is signed, that is the time where the merchant banker role starts. So what a merchant banker do is they do a preliminary background check of the company, its promoter, promoter group, directors. All these a preliminary background gets checked. Various due diligence are also carried out by the merchant banker. So what are these due diligence all about? So the first due diligence that gets carried out is financial due diligence. So what happens here is the merchant banker takes care of the entire financial due diligence process, wherein they see how the financials are, as in how the financials are, how strong they are, what kind of ratios are coming out of that, what are the inventory days or the trade cycle, operating cycle, basically gaining the confidence that the financials are strong enough. Then checking the compliance with the respect to the financials part, that is whether the audit has been done or not, and the financials are in conformity with the rules and regulations applicable to them, as in Schedule 3, AS or Ind AS, whichever is applicable. Then the second due diligence, which gets carried on, is secretarial due diligence. Secretarial due diligence is one of the most important aspect of the due diligences, since it makes sure that the company has complied with the Companies Act 2013 provisions by the means of ROC, or in case the company has not complied with the provisions, how can those be, corrected and fulfilled as per the rules and regulations prescribed by the Companies Act. The third due diligence which gets carried on is legal due diligence. So what exactly legal due diligence happens is, in legal due diligence, we see what are the litigations that have been filed by the promoter group, and the issuer company or the group company. And what are the litigations that have been filed against all of these four folks, as in the promoter group, group companies, and of course the issuer company. Once all these due diligence happens, as in the financial due diligence, secretarial due diligence, and the legal due diligence, the merchant banker gets a very detailed understanding of how the company has been performing in the past, and what sort of compliances has been done by them, and what kind of issues that persist in the process. Once all of these things are done, the merchant banker visits the site, and after doing all of those stuff, the IPO restructuring part starts. Let's suppose after discussion with the management, we realize according to the eligibility criteria, or due to some capital restructuring, we need to have a private placement issue of shares, or we have to do some buyback, or we have to do some rights issue, not the rights issue, but rather the private placement of shares. So any of these things are required to happen. So these are combined under the pre-IPO era, where the capital restructuring happens for getting the company prepared for the IPO. And then what happens is the financial of due diligence report. It is nothing but the internal document where merchant banker does the entire records the entire due diligence. Once all these things are done, Then comes the preparation of draft offer document, that is the draft red herring prospectus. After preparing the draft herring prospectus as per the regulations prescribed by the exchange and ICDR, this get ultimately filed with the exchange. So now what exchange is gonna do? Exchange is going to check each and every point that has been mentioned in the offer document, whether they are correct and whether they have been complied with as per the rules and regulations prescribed. In case the exchange feels that there are some concerns or issues or queries, so they send an observation to merchant banker, which ultimately gets resolved by the merchant banker. And in case they feel each and everything is fine, so the merch, exchange gives an in principle approval to the issuer company. And once an in principle approval has been received by the company is ready for the IPO. Basically, now it's sort of a yes that yeah, the company's IPO could happen. Yeah, on a very good note, and the in principle approval has been received. After receiving the in principle approval from the exchange, what happens is there are many intermediaries involved in the entire IPO process. I'll be covering it in a later stage. So all those intermediaries get appointed by the issuer company in consultation with the merchant banker. Since issuer company does not have that visibility as to, who is the right intermediary for that kind of purpose. As in, let's suppose, registrar and share transfer agent. So the merchant banker helps the issuer company to appoint all the intermediaries that are required in the entire IPO process. Once all these things are done, and then the merchant banker files the red herring prospectus to the exchange. After filing the red herring prospectus to the exchange, what happens is the merchant banker makes sure to arrange, along with advertising agency, to arrange road shows. One, you have to make people aware that such kind of companies bringing out its IPO, what are its strengths, what are its financial background, how capable the company is, what the promoter is up to, and what is its background. So all those things are arranged by the advertising agency along with merchant banker, where road shows are arranged, investor presentations are done, public relations are done. So all of these things happen, uh, and then when the offer is open for subscription, and once the offer gets closed, so there has been change in the rule. So I want a bit of attention here. There has been two mechanism that was prevailing. First goes for T plus 6 that was prevailing till now, and the T plus 3 mechanism that is going to happen from 1st of December. So what exactly is T plus 6 and T plus 3? So let's suppose the offer gets closed on 1st of January 2023, for an example. So on 1st of January 2023, when the offer period gets closed, right after the next day, that is T plus 1, the prospectus would be submitted. Registrar and share transfer agent will be doing the basis of allotment thing. So what exactly would be covered in basis of allotment? So as I told you earlier also, the basis of allotment is a process where registrar and share transfer agent, the RTA, makes sure that the shares are allotted to the investors who have applied for them in the according to the rules and regulations as prescribed by the ICDR and exchanges. Once it is done, they get a confirmation from the exchange about the same. Once they have a basis of allotment that ultimately gets applied to the right amount of intermediaries that require the information, then merchant banker files a prospectus to the exchange. Upon filing of the prospectus, uh, on T plus 2, basically the second day, that is the 3rd of January, the issuer company is going to get a listing approval from the stock exchange. Once the listing approval has came, that implies that the company is now ready for listing. And on the third day, that is T plus 3, that is the 4th of January 2023, the company would ultimately get listed on the stock exchange, and the promoters and all the shareholders will be unlocking their wealth. The company would be ready for a growth trajectory, and the share is available to trade on the platform. So that's how the entire process of the SME IPO looks like. Now, a couple of things that I would like to mention here is, so there are two types of issue. First is fixed price issue. Second goes for book building issue. So what exactly are these two issues? You must have seen while applying for IPOs that the IPO is coming at a price of rupees 50 per share. So that implies fixed price. There is no price band or price range. The valuation is fixed and the IPO is going to come at this price and the share will be allotted at this specified price. If I talk about the other type of issue, that is book building issue. So what exactly is book building issue? You must have seen, just like people have, I think almost everyone would have applied for Tata Technologies IPO. So there was a range of 475 to 500, right? So what was that? So that range basically tells that the IPO is of book building. So book building type of issue enables the entity to get an idea about the demand of the company and how what kind of valuation are the investors looking for in the company and what exactly are the rules for it. So let's suppose the company's floor price, as in the price band, floor price is rupees 100. So how far can the price band could be? So according to the regulations, the upper price band could be more, maximum 20%, that is 100 to 120. And how what is the minimum slab for the upper price? That is 5%, 100 to 105. So the minimum criteria of in a book building issue is you have to maintain a price of range of 5%, okay, 100 to 105. And what could be the maximum scenario? That will be 100 to 120. So these two would be the uh, criteria that has been prescribed by the SEBI for going for the book building issue. So these were the kind of issues that I want. Now I hope you got an understanding how exactly the entire IPO process looks like. What are the things involved here, and what exactly is the flow right from the scratch till the share is traded on the listing platform. Now, as I just told you, the a way long procedure, you must have got an idea that there are many intermediaries that will play their important role in the IPO, right? So let's take a look at each and every intermediary that is involved in the IPO process. Just give me a right away, starting from book running lead manager. Book running lead manager is nothing but a merchant banker who takes care of the entire IPO in the same way, just like a father takes care of their daughter's marriage. That is right from the start till the end, each and every aspect book running lead manager or the merchant banker is involved. It makes sure that entire due diligence are considered. It makes sure filing of the offer document or the IPO application to the exchanges, getting the right amount of approvals. All the rules and regulations that are provided by SEBI are being complied with or not. Then talking about marketing, promotion, and managing the entire IPO is taken care by the merchant banker. So now you got to just how important the merchant banker is for the entire IPO process, because right from the scratch till the end, he is the one that is involved in the process. He makes sure that everything goes smooth and there are no hiccups in the entire process, and every rules and regulations that are required to be complied with is complied, and the IPO goes up for a fantastic launch. Now, if I talk about the another intermediary, that would be registrar and share transfer agent, the registrar to the issue RTA. So what does an RTA does? Just like how a merchant banker communicates to the exchange, RTA communicates to the depositories. So what is exactly is the role of the IPO? What do they do? So first thing that the RTA does is make sure that all the existing shares of the organization are in dematerialization form. They get into an agreement with they make an agreement between the issuer company and the depositories that whatever shares that are going to get issued will be in the demat form. They do the IPO application processing. Then the another role that comes is of allotment and refund. Just like I told you in the slide before, that all the basis of allotment work is done by the RTA. So they takes care of that entire process. That is one of the important aspect where the shares are ultimately allotted to the public or the other institutions that have been applied for it. Along with this, they also take care that in communication with or in coordination with banker to the issue that the non-allottees get their right amount of refund for which they have applied, but the shares are not allotted to them. So this is majorly the role of RT in the entire process. The third point, ultimately the point for which we all are here, banker to the issue, right? The company is here for funds. So where are the funds gonna place? How they are going to get placed? So let's go into bit of a detail here. Banker to the issue is nothing but the banker on to whom all the funds are going to come on temporary basis. He is going to manage the entire fund that is going to come for a the period of for the offer period, and until the money gets credited to the company's account and the refund gets processed to the non-allottees. Then there, how for where exactly is this place? So there will be an account opening called escrow account. In escrow account, all the investors who are applying for their bids, their money basically comes to that escrow account. Banker also does the coordination with depositories to make sure that the whosoever are the non-allottees get their refund, just like I told you. And when the entire process is done, all the post IPO closure is done, after deducting the issue proceeds, the banker to the issue credits the fund raised to the company's account. And thereby comes the end of the role of banker to the issue. Another important intermediary involved, that is the market maker. Now, market maker is one of the most important concept in the SME IPO, provided by the and that has been brought up by the SEBI because of some concerns that have in the investor's mindset. First being, there would be no liquidity in SME. So how would that be ensured? The prices may range and the volatility would be much higher. How would that be ensured? So all these type of questions gets answered by the process by the market maker. So market maker is basically an institution registered under the SEBI guidelines or the exchange guidelines. What does a market maker do? So market maker makes sure that the shares are available, that the investor gets the comfort of selling or buying the shares from the exchange post IPO listing. So how exactly it is done? So what market maker is gonna do is, let's suppose in a ideal trading day, out of the entire time period for which the trading day is available, 75% of the time, market maker is going to make sure that the IPO, not the IPO, but the script is in trading. How will it do it? He'll place a cross bids, as in both the buy bid and sell bid will be placed by the market maker, and ultimately ensures that the liquidity of the stock is maintained and the prices are stable. This certainly gives an confidence to the investor that the stock is going to be listed once the IPO has came, and no blunders are going to happen with the stock, which ultimately many people have a myth about. And if I talk about the other aspect, that is the prices are going to be stable. So one thing I want to be very clear about is, in no way market maker is responsible for, increasing the market capitalization or other sort of allegations which people have a myth about. Market maker's role is only to stabilize price and make sure that the stock is liquid post the post the listing ceremony. Many people have wrong sort of background about the market making thing. No, the market maker's basic concept is to make sure that the stock is liquid and the prices are stable. Now, if I talk about the underwriter, underwriter is nothing but just like a father who says to his son, go ahead, launch your IPO, whatever happens, I'm right here to help you. So, in SME IPOs, market making is underwriting is mandatory. Sorry, underwriting is mandatory. 100% underwriting has to be there. So, what does an underwriter do? Let's suppose in case an IPO comes of 5 crores, okay, and only 3 crores were subscribed. So ultimately, the balance amount of 2 crores of stock would be purchased by the underwriter. So how exactly underwriter, takes the guarantee? So underwriter takes the guarantee by analyzing what is the risk involved in the IPO and what is the, other sort of aspect that could be of much more relevance in case the IPO goes unsubscribed. However, if I talk about the current market sentiment that has been revolving around the past 2 to 3 years, there has been hardly any IPO in which underwriter has to buy the stock. There has no such IPO. Reason being the market sentiment is really good. Investors are looking towards at a very positive side to the SME IPOs. So that is the core reason, and that's what underwriter does. Now, if I talk about the advertising agency, so let's talk about how do you know about the IPO of Mama, or how do you get to know about the IPO of Tata Technologies? How do you get to know about the IPO of Basilic? So it had happened with a sort of strategy that gets prepared behind the scene by the advertising agency in consultation with the book running lead manager or and the underwriters to the issue. What do they do exactly is they plan a specific campaign strategy for the IPO that is going to come for the issuer company. They arrange investor meetings. PR, public relations are being maintained by them, roadshows are being done by them. So what exactly happens? They are going to make people and investors aware about that this is the company who is bringing their IPO. What are the financials look like? And what exactly is the USP or the competitive advantage that the company has, the background of the promoters, and why any investor should take a bid on them. Basically, marketing the IPO in such a manner that investors get an idea about what the company is and whether it is feasible for them to apply for the IPO or not. So this is ultimately the role of the advertising agency. But talking about the monitoring agency, uh, honestly speaking, in case of SME IPOs, monitoring agency does not play much roles because the issue size does not get exceed rupees 100 crores on normal circumstances. Monitoring agency role comes into the picture only when the issue size gets increased to more than 100 crores. So what this monitoring agency does? Monitoring agency is nothing but just like a monitor in a classroom that whose work is to see that each and everything is in line. Every rules and regulations have been complied with. There has been no unethical practices going on, or any sort of sense of price violation or price manipulation has been going on. All these things, have been keenly observed by the monitoring agency. And also, if the funds that have been raised by the company are being utilized for the said objective or not. So all these things, monitoring agency takes care that the company is doing it. Monitoring agency is nothing but an upper or higher level agency that gets looped in when the IPO size is more than 100 crores because in the funds involved is much higher. So that there's a extra level verification or check that gets applied on the issuer company. Then comes one of the most important intermediary, stock exchange, because of which ultimately issuer company is able to raise funds and do the entire tapping of wealth or going towards the growth path. So what does the stock exchange does? As you all know by now, the stock exchange provides the trading platform to the stock or the issuer company. Another point being, if I talk about the background IPO process, the first ever IPO application has been made to a stock exchange. Every approval in the case of SME IPO is received from stock exchanges. Basis of allotment gets confirmed by the stock exchanges, and all these things happen. And ultimately, it is the stock exchange that is the backbone or that is the major, felicitator of this entire SME IPO, because of which there is a way much more opportunities available for the SMEs as of today. Now, if I talk about the ultimate role of chartered accountants and company secretaries, I would be covering it in detail about all the opportunities that exist for we as a professionals in the entire IPO process. But in a gist, if I say so, CA, we all do all the due diligences, the audit part, and all the certifications that are required in the process. If I talk about company secretaries, entire secretarial due diligence has been given to you. Certifications are issued by the CS that are certainly required in the entire IPO process. Preparation of offer document and other things are also being done by the company secretaries. If I talk about the another intermediary, as I just told in the earlier, even the steps part, legal counsel. So what does legal counsel do? Legal counsel is basically takes care of the all the litigations that I explained earlier against or by the company or against the company, promoter group, director, and the group companies. So these have been taken care by the legal counsel. If I talk about valuers, so where exactly we are getting looped in the entire process, you must have not heard of us till now in the entire IPO process. So earlier I told you that there is a pre-IPO restructuring which happens, right? That could be in the form of buyback or transfer of shares or any private placement that is being done. So at that time, according to the Companies Act 2013, there is a report required from the registered valuer. And then if I talk about as per Income Tax Act or FEMA, then again a report is required for compliance with Income Tax Act and FEMA. Report of merchant banker, like I as a merchant banker issue report for the valuations, and also the chartered accountant can issue report for the FEMA Act. So this is all the major intermediaries that are being involved in the process of the IPO. Another intermediary involved, that is the printers. So basically the issuer company gets in an agreement with any printing agency that takes care of the three major things. One being the printing of offer document that gets placed. There is some minimum number of hard copy of offer document that gets submitted to the exchange or SEBI. So these number of offer documents ultimately gets printed by the printing agency. Then printing of applications form, then newspaper print advertisements. All those gets covered by the printers. So I hope you now got an idea what all are the major intermediaries that are involved in the entire process of IPO, what role they play in the process of IPO, and how crucial their role is. So now moving ahead, ultimately, what are the 4 to 5 laws that are in the which the entire IPO process is being combined? So there are 5 regulations primarily. One being, as I earlier told, SEBI ICDR Regulations 2018. They basically tell all the issue-related guidelines that needs to be complied with. Second being the SEBI Merchant Banker Regulations 1992. As book running lead manager is the merchant banker, so the regulations that are applicable to us by the SEBI needs to be taken care of. Third being the Supreme of all Companies Act 2013. They need to be complied with all the conditions that have been prescribed there. Fourth being SEBI banker to the issue regulations. SEBI has differently and explicitly prescribed regulations that the banker needs to follow. Since it is very important that the IPO is being raised for funds and banker is the one who will be managing that entire fund for a temporary period. So there has been a specific regulation that have been prescribed for that. Another being SEBI listing obligation and disclosure requirements. We all know LODR is applicable post listing. So all the rules and regulations that have been prescribed in the LODR have to be complied with by the company. So these were majorly the 5 laws around which the process of the that are applicable during the process of the IPO. Now one of the primary or major question which everybody has: why should I go for SME not main board? What does main board has that I cannot? Right? So if I talk about the major differences, let's get into much of a competitive form. Main board have very strict and complex eligibility norms, but I just told you that SME IPO has very basic eligibility criteria that any company could be fulfilled if they wants to bring an IPO. So this certainly gives SME IPO much more leverage. Then if I talk about the other condition, that is the post-issue paid-up capital. Here also it is specifically mentioned only share capital should be minimum of rupees 10 crores. But if I talk about SME IPO, there is no minimum condition. Only there is a maximum condition that is not more than rupees 25 crores. So that certainly again gives a leverage to small companies for bringing their IPO on that platform. Another condition means the offer document that gets filed is observed by SEBI in the main board IPO. But if I talk about SME IPO, offer document is certainly being approved, and every approval, in fact, is received from the exchange. If I talk about the market making part, as I just told you how important market making was in the SME IPOs, but in main board, market making is not mandatory. In SME IPO, market making is mandatory for a period of 3 years that gives a sense of trust and comfort to each and every investor that the stock is going to be liquid, the company is going to perform better in the future. Now, what is the other sort of relaxed norm? In main board IPO, every quarter you need to file audited accounts. So ultimately, the process of compliance increases. But if I talk about SME IPO, you only need to file half yearly audited accounts. So basically, two reports have to be submitted in the entire year, but here four reports have to be submitted in the entire year. Then if I talk about underwriting part, in main board IPO, underwriting is not mandatory. But in SME IPO, I told you that 100% of the IPO underwriting is mandatory, which gives a sense of comfort to the issuer companies that somehow I'll be in a position to raise the funds. And out of that 100%, 15% has to be mandatorily underwritten by a merchant banker. Usually, merchant banker can underwrite the entire IPO if he wants, and if not, minimum slab of 15% has to be underwritten by him in case the IPO goes unsubscribed. So this gives basically a sense of trust that the merchant banker is not going to bring some any XYZ company to IPO because he is right there sitting to underwrite. So that is it. If I talk about the minimum IPO application size, so the minimum IPO application size in main board IPO is 10,000 to rupees 15,000. And according to the regulations prescribed as in the number of lots and the share pricing range, the price usually comes to 14,500 or 15,000 in main board IPO. And if I talk about SME IPO, the minimum IPO application size has to be rupees 1 lakh. Usually, the SAFI application size comes to rupees 1.15 to 1.20 lakhs. The reason being, there is a specific detailed chart that has been given by the exchange or the SEBI that prescribes what should be the range of lots, and at that specific range of lots, what should be the price. So the multiplication for each and every lot comes to somewhere around 1.20 lakhs. Now you must have got a question here that why should I invest more in SME IPO? So, as Charlie Munger once said, that it is not the buying or selling that makes the money, but the waiting. So, that was the intent that the SEBI had back in 2012. That the SEBI wanted that whosoever are investing in SME IPO should invest for a longer period of time. So, with that kind of perception, the minimum IPO application size in SME IPO was kept at rupees 1 lakh. Now, just like I told you, that the platforms for trading both the stocks, as in the main board and SME, are different. So, main board IPO gets traded on NSE and BSE exchanges, and in the same way in SME, the SME platforms, that is the BSE SME or NSE emerged, the SME stocks get listed on these platforms. So now, hope you got a gist about how what is the exact difference between mainboard IPO and SME IPO, and why SME IPO gives much more leverage to small and medium sized organizations. Now we are going to unveil one of the pathway that could be fulfilled that the company was not able to go to main board, but now it could. How exactly? That is through the migration process. So what exactly is migration process? Let's suppose I have a company named X. So today it has been listed in the SME exchange, NSE emerge. Now I want to grow, right? Once I have been growing and all those things are happening, as in the financials have been made in a more strong way, we are gaining the investors' trust. Now I can look towards going to the main board. What is the benefit of going main board? Getting the right amount of recognition, more sort of funds could be raised because there are high volumes present in the main board IPO. So because of all those reasons, migration from NSE emerged platform to main board of NSE. Now, let's again try to have a detailed discussion about what exactly, are the eligibility criteria or the parameters that are required to get any company listed on the migrate on the main board of NSE. So the first parameter is paid up capital and market capitalization. So as we just seen in the last slide that the market paid up capital should be at least rupees 10 crores. So in the same way, the paid up equity capital of the application shall not be less than 10 crores for getting itself migrated to main board of NSE. Then if I talk about the capitalization part, the capitalization of the applicant's equity shall not be less than 25 crores. Now, how exactly and what is exactly here is 25 crores. So basically, the my company named X, its market cap should be 25 crores. For how much period it is to be there? In NSE, it has been prescribed that for 90 trading days, we have to take the market cap. So accordingly, an average price of 90 trading days are calculated, multiplied with the number of shares that exist. And if the market cap has to be 25 crores or more than that, and if both these conditions are fulfilled, as in the 10 crores and the 25 crores market cap, then we can see the next condition, that is the EBITDA and profit after tax. So what exactly is the condition about EBITDA? The whole sole reason of adding EBITDA here is the company should have a positive cash outflow out of their operating business, right? The applicant company should have a positive cash outflows in how much years? 3 financial year preceding the financial year in which the application is being made. Okay. So all the 3 financial years, there should be positive cash accruals. And just in the immediate preceding year, as in the last year, the company should have a positive part in the immediate financial year of making the application to the exchange. If I talk about the listing period, the applicant should have been listed on the SME platform of the exchange for at least 3 years. So basically, the sole reason of adding 3 years here was earlier it was two, by the way. Now it has been amended to 3 years. The sole reason of giving 3 years is that once the SME company is listed, right, in a span of 3 years, it gets an idea about what kind of compliances it has to do, how exactly a listed company performs, what are the compliances that get increased, and when in a span of 3 years, when the company is well aware of how exactly the we are going to perform, what are the listing criteria they have to meet, post listing, what are the compliances they have to do, what kind of meetings they have to arrange. So once the company is well aware of that, the company is ready to go to main board. If I talk about net worth, the net worth of the company at the time of filing the application should be at least rupees 50 crores. Then comes the part of public shareholding. So in SME IPO, the minimum number of shareholders required are 50. But in main board, the minimum number of public shareholders are required is 1000. So the SME company for migration should have a bare minimum number of public shareholders as 1000 to get itself migrated to the main board. So these were the primary 5 criteria that are required for migration to the main board of an NSE, of the company listed on NSE merge going to the main board of the NSE. Let's look at a gist here. Once again, paid up capital should be not less than 10 crores. Market cap should be bare minimum 25 crores. Company should have positive EBITDA in the last 3 years, positive PAT in the last year. Listing period on SME platform should be 3 years. Then the net worth of the company should be at least 50 crores, and the public shareholders should be at least 1000. So I hope you now get an idea how exactly migration is going to happen from an NSE merge to the main board of the NSE. Now let's see what exactly is the criteria required for a company that is listed on the exchange of BSE SME platform to the main board of the BSE. First criteria being the same, that the market cap should be minimum rupees 25 crores. The only catch here is in NSE it was 90 trading days now, and here it is 20 trading days. The second criteria being that the company should be listed and traded on SME platform for a minimum period of 2 years. There has been an amendment that has been made, came out from the BSE yesterday itself, where the criteria has been changed from 2 years to 3 years. So now on both the platforms, the company should be existed on an SME platform for a span of 3 years for getting itself migrated to the main board. Then other normal compliances and a special resolution shall be passed in the AGM with two-third majority for the migration. We have to, the catch here is that the promoters shareholder favoring the migration shall not be counted here. The public shareholders or the other shareholders would be done except the promoter. Once the company is migrated, they have to comply with the post-listing LODR requirements. The company, its directors or promoters should not be have been divided by SEBI, and all those basic conditions are to exist in each and every of the migration or the issue that has been told you earlier also. So these were the basic migration conditions. So I hope now by you have got an idea how exactly the companies are going to migrate from one SME platform to the main board. Now, one information I would like to add here is any company could be get listed themselves on any one SME exchange. Basically, I can get myself listed if I have a company. So I can get myself listed either on NSE Merge or BSE SME, not on both the exchanges. But While at the time of migration, I can get myself listed on both the NSE and BSE as well. So, and on board companies could exist on both the platforms, but in SME, company could exist only on one platform. So that's how the conditions are regarding the availability of company of the listing part. Uh, Now, if I talk about the parameters for valuation, so ultimately there are many queries and thought process that relies behind that how this company is being valued at 100 crores and why the valuation of this company at 150 crores. How does that valuation figure gets decided? So let me be very clear on this fact that it is not the DCF or the any other specific source of method that is being used for calculating the valuation while deciding or going for the IPO. Rather, a mixture of methods, many other criteria depending on case to case has to be checked upon for seeing for checking how exactly we are going to define the valuation for the company. These are some initial and comprehensive exclusive points. This is not an exclusive list. I'll be very clear because each and every company has different sort of criteria that needs to be checked upon while deciding the valuation. So let's dig into these points by one. I hope you are till now you have got an understanding exactly how the process is and how things are happening here. The first goes for industry analysis. So what exactly do we do in industry analysis? Let's suppose I have a company that is doing in manufacturing business. So ultimately, how the entire manufacturing industry is performing, I am a part of that manufacturing industry. So I am going to perform in a similar manner. I'm certainly not going to outperform the industry at the end of the day, right? So this is one of the main core factor that has been taken. Second thing which we also consider is what is the investor perception and the market sentiment. As of today, if you talk about the market sentiment for SME companies are great. Companies are getting a very good valuation. Investors are ready to accept such the SME IPOs. So ultimately, hereby the company demands a higher valuation or commands a higher valuation. The third point being the financial statements and analysis. So the company's financial statement, as I told you earlier, also in the due diligence part, the merchant bankers check how strong the financials are, how exactly the ratios look like, what is the operating cycle of the company. Is it in the lines with the competitor or is it more? In case it is more, the company has certainly have a drawback. But if it is less than the competitor and the company is able to, the trade receivable days are less. So these are basically a sort of advantages that a company gets, a good reputation, and somewhere or down it helps in demanding a higher PE ratio for the company. Then what kind of suppliers it has, what kind of customer it has, right? So there's a reason why the 3-year period have been mentioned by the exchanges in their eligibility criteria. Because let's suppose I start a company today, it is going to take a period of at least 5-10 years by when I'll my objective of running the company would be defined, the objective of company would be decided, how exactly we are looking for growth, in what areas we want to grow, what are our set of suppliers, what are our set of customers, what is the end-to-end procedure, and is it much more an ecosystem in itself. If the company is able to get all those things, it is certainly a much more added advantage to the company while we are doing the valuation part. Another concept is USP of business. In today's world, you have to got to do something different, right? So what exactly you are doing, how exactly it is different from others, is it much more beneficial, how useful your product is. So all these things get covered here in the USP of business, and if the USP of business is really good and strong, it certainly gives a competitive advantage to the company. If I talk about the competitors, one of the major criteria as in today's world is how exactly your competition is performing. So if you're performing at the same level of your competition, you are doing fine. You are going to have a decent valuation. But let's suppose if you're outperforming your competitors in a very robust manner, that certainly means that you are, as an organization, you are self-sufficient. You have created a very good ecosystem, and all these things again demand for a higher valuation. Basically, whatever factors that I have just explained you, are the factors which are encountered while we are somewhere maintaining a PE ratio of the company, and how high it could go or how low it could go is based upon such kind of factors, and also many other factors, as I told you just that it is not possible to decode the parameters for valuation of any SME or any main board. It is mainly due to the each and every company's ability to generate profits or generate revenue, how self sufficient it is. So all these things came into a major play. So from where does the entire process of valuation start? So let's suppose I am into manufacturing sectors. I manufacture laptops, and in the same way, there's a company that also manufacture laptops, and it is listed on the main board. So how exactly we are going to value it? So the first assumption that it has, let's suppose the company's name is X, who is listed on the main board, and that company's stock is trading at a PE ratio of 20. Okay, so now I'm going to how justify or in my mind have a perception about the valuation. So if the listed company is trading at 20, of course it is on main board, so the financials must have been good and all of those stuff counts. So there will be a discount. So let's suppose from 22 I'll come to 18. Then once I come to 18, there will be a discount for since the company is SME and the issue size is less. All those factors again delve into and what are the major drawbacks. So that's how we keep lowering down and then we comes at a consensus for the entire valuation part. So that's what are the parameters for valuation. That's how the valuation gets decided. But ultimately, it is something that gets decided on based on each and every company. Like every human being is different. In the same way, every company is different. Every company has different sort of processes. Every there's different set of customers. So that certainly gives them their own valuation. And once the company is valued and the IPO has been launched, the right valuation ultimately what investors are percepting up to or what is the perspective of investor have been told by the market cap basically. Yes. So this was the parameters of valuation. Now let's go into till now we were seeing all bed of good roses. Now let's see what is the bed of thorns. Basically, what is the pain point once the company is listed. So there are 5 to 6 major points that have to be challenges and considerations that we needs to be take care. First is compliance and regulatory requirements. The promoter or the owner of the company now has to realize that it is not only now that he is the sole owner of the company, but rather a community of shareholders have come into a picture who are owning the company, and you have to make sure that every regulation has been complied with. There is no sort of irregulation or non-compliance on the end of the company, because it's always like 100 good works could be overlooked by just by a single bad work, right? So in the same way, company has to make sure that it keeps on complying with all the requirements or rules and regulations that have been prescribed by the different acts that are applicable to the organization. Market conditions, this again being of the highest importance. As I just told you, the current scenario for the IPOs is really positive. The market sentiment is good. The investors are ready to accept the SME IPOs. So this certainly gives them a higher valuation, and the investor interest also gets increased. But if the market sentiment is not good, let's suppose if I talk about 2 years before in the COVID period, right? So there were not many IPOs launched. Why? What was the reason? The major reason was the market was not ready to accept such kind of IPOs. The investor did not have the money. There were liquidity crunches. So while all these things were revolving around, that was not the right time to bring the IPO. But as of today, the market conditions are really optimistic about the entire thing. So this is the right time to bring the IPO in case the company is ready to do so. And also at this point of time, the company is going to get a higher valuation. So this thing does affect the entire IPO. If I talk about the third part, that is the corporate governance. This is again one of the high importance thing. Again, promoters have to realize that it is no more their own thing, but a community of shareholders. So they have to maintain very strong corporate governance. They have to make sure that the composition of board of director is according to the SEBI requirements. And the SMEs, they have to invest in the governance practices. People needs to, adapt to the governance practices that have been prescribed, because non-compliance of governance practices is seen by the investor as a big red flag. So this have to be taken care of. Now, if I talk about the another important point being the liquidity concerns, this is of moderate importance. Why it is of moderate importance? Reason being the market maker has been looped in the process of SME IPO, right? So if market maker is going to make sure that the IPO is liquid for a mandatory period of 3 years, and post 3 years also, if the issuer company feels so, it can make sure that the market maker is looped in. So the volumes get traded, investor interests are being taken care of. So that's how the liquidity concerns is also a big challenge and a consider challenge here. If I talk about volatility and investor perception, as I told you in the market conditions point itself, investor perception is one of the most important thing. Just like if I talk about the recent IPO that got launched, Tata Technologies, right? Just by the name of Tata, the investor had a very optimistic perception about the entire IPO. Even before looking into the prospectus or the detailed analysis provided by everyone, people have somewhere very optimistic ki it is a Tata's IPO at the end of the day, right? So investor perception do matter a lot. SME stocks surely have a high volatility, so that also affects the investor perception. So these are the major challenges and considerations that come in the process of the IPO, and the issuer company has to be get prepared once listed how it is going to make sure that each and every rules and regulations they have to comply and make sure that the company is on a very good growth trajectory path. Now coming towards the major thing which we all are interested in, how exactly we are gonna get work, where we can be looped in the entire IPO process. So there are many things that happen in the entire IPO process where we can be looped in. Major six things which I have wrote here. One among them is the secretarial due diligence and certifications, right? So company secretary does the entire secretarial due diligence on independent basis. So that's how the new assignments get added here. Then the certification work again comes from there. You can also be an advisor to the company. Now, this is one of the point which is more than a point. It is basically an urge to all the traditional practitioners out there with very due respect. As of today, if we think about SME to get them funded, what do, right? We go for CC limits. We have to reform our thinking just like our practices are being reformed. That now, if the company is at a decent stage and if they want to raise funds for some specific purpose, they can surely go for the IPO, and you can become an advisor to the company, as in guiding the company throughout the IPO process and helping them out sort the issues that they face. So this is one of the major concerns. It's basically every traditional practitioner as of today is sitting on a gold mine that could be tapped, if I say it in my terms. So that should be one of the major paths. If I talk about another aspect which is involved is financial due diligence and certifications, right? So financial due diligence, as we all do, has to be done in the IPO process. Many certifications are required by the chartered accountant in the entire IPO process and even post IPO process. As in, let's suppose the company has raised funds for this purpose. So whether they have been utilized it for a specific purpose or not, these kind of certifications are required from the chartered accountants. Again, internal audit applicability gets increased, so the company will we again get assignments for internal audit as well. Talking about the aspect of restated financial statements, let's go in a bit deep here. So what happens here is, as I just told you in the offer document, the 3 year financials go, right? So what is those 3 years financial? Is it the audit report that was conducted earlier? No. According to the ICDR regulations, the company will have to get prepared restated financial statements. So what is restated financial statements? Restated financial statements are the financial statements that have to make sure that they comply the requirement applicability of the company's Act 2013 guidelines, which says either they should be complied with accounting standards or Indian accounting standards, whichever is applicable to them, Ind AS or AS, along with compliance with the Schedule 3 requirements. So once all these three are met, these are the things as in the restated audit, the restated financial statements go in the offer document or the DRHP. But one thing that we have to make sure is restated financial statements could only be done by a peer-reviewed audit firm. So yeah, this is one of the criteria that has been prescribed by the exchanges and the SEBI, that the peer review audit firm could only do the restated financial statement assignment. Now, if I talk about legal due diligence, so what exactly is legal due diligence? Just like I told you, it has been repeated twice, so I won't go into much detail as of now. All the litigations prospects has been covered here. There's even a chapter in the offer document, as in wherein all the litigations have been described that have been running around. So these are all the major six opportunities that lie for us as a professionals in the entire IPO process. Being an advisor to the company is one of the core thing that is basically a reform that we can think of, suggesting the SMEs that they should go for IPO instead of always getting them CC limit, because at the end of the day, either they do not have the collateral or funds to grow themselves in such a good growth trajectory that they could. This is one among them. I hope by now you have got an idea of right from the start when the company is eligible and then how exactly the process flows, where we all as a professional can be looped in and where we can pitch in. So all those things come under the picture. Now let's look at a very brief a few of the SME success stories that has happened lately. So a company named Allen Technology Solutions Limited IPO recently came. We only did that. So the issue size was 15 crores. So the company raised the IPO firstly for the working capital needs and the general corporate purpose. So if you see, the IPO came in financial year 23. The growth in revenue has been massive, right? From 19 crores to 32 crores, almost 33 crores. So there has been an increase of 70%. So the funds raised did not only give the company and handsome boost in the revenue, but also and a handsome boost on return on equity of 35% in the past 3 years. So what exactly happened here is that the company was able to grow, and ultimately when we are coming from EBIT to EBT, that is reducing the interest cost, what happens is SMEs lose a major chunk of their profit because they have to pay heavy interest to the banks. And it is the time that we realize we are not working for the banks, we are working for our own owners and the shareholders community, right? So that's how the return on equity got very handsome. If I talk about debt to equity ratio, that reduced from 1.19 to 0.11. This major reduce in debt to equity ratio was not because of repayment of debt, but rather because of right capital restructuring, which was required in the organization. So this was one of the success stories. And if you'll see, the March 22, the 19 crores was the sales, and right in March 23, the SME issuer company, that is Enlon, was able to achieve a revenue of 33 crores. One among the another success stories is Phantom Digital Effects Limited, right? So this company does the VFX things. It has also been part of the big films like Bahubali, Triple R, and all. So the company launched the issue size of 29 crores. So the sole company's purpose of launching the IPO was, setting up different offices at different locations and expand themselves. So they did. The revenue also grew almost 1,660%, right, from 22 crores to 57 crores. So what exactly did you got here? The catch was the company had the ability to expand, but just because of unavailability of funds, the company was not able to expand. So that's how the SME IPOs give a very radical and robust growth to the SMEs for their growth. Then the EBITDA margin have also been very handsome. If I talk about the stock prices that have been almost 51% growth. So the stock prices growth basically depicts that the liquidity was maintained throughout the year and there is a handsome generation of listing, not only listing gains but the wealth that have been happened in the past. If I talk about uh, if we go further, these are the PNL of Phantom Digital Effects. You can have a look at it for a minute. Now, all these were the technical aspects or the growth part in the SME IQs. But what is the other aspect? Bringing you to the main point, that is market capitalization. It's always said when you invest in a right company and you wait, ultimately you get very handsome and wealthier returns. How does this thing happen? Let's suppose if I talk about one of the companies like Aditya Vision, right? On the listing date, its market cap was 18 crores. As of 30th September, its market cap is almost 2,800 crores. So how did that happen, right? So investing in the right company at the right point of time. and staying patient for a while till the company performs, till the company achieves the right amount of growth. People were able to generate a very good amount of, or people as in the shareholders were able to have very good amount, generate a good amount of wealth through these IPOs. So this is basically a the whole sole reason of telling you the market capitalization is there might be bad fishes in the sea, that, but that does not mean the good companies gets ignored, right? The right good companies always gets seen. The wealth has to be generated someday or the other if the company is on the right path of growth. And let me be very clear here. None of the companies that have been put here is meant for any investment purpose or not. Do your own due diligence. These are just sample companies just to get you an understanding how the SME companies grow. Okay. So moving ahead. So let's look at the IPO statistics that have been revolving around till now. So if I talk back in 2012, when both BSE and NSE started their IPO journey, launched the SME IPO platforms. Right from 2012 till 2023, a total of somewhere around 887 IPOs have been launched till date, almost 850 plus. Out of that 850 plus companies, 315 plus companies have been migrated to main boards. Now, this is a highlight that we all want to show you that the companies have migrated to main board, as in the companies have outgrown. The ultimate aim of going to main board has been achieved for such kind of a percentage. If you'll see, it's almost like 30 to 40% of the companies have been migrated to main board. Now, if I talk about the IPOs that have been launched in 2023, they in itself are more than 150, somewhere around 166 or 167. So this somewhere depicts how good the market sentiment is as of today. And what we are expecting is, as for SMEs especially, for the entire coming decade, SME IPOs are going to see a very good growth. Companies are going, many IPOs are going to come. There is going to be very handsome valuations that good companies can fetch for. And if you see the graph that has been mentioned here, only 2019, 20 took a dip. That is just because of the COVID period. Else, if you talk about the growth is always increasing. That is because the market is ready to accept such kind of companies who are at the initial stage and they are ready to grow at a very radical growth. Now let's look what the amount of funds that got raised. So the amounts of funds raised till date, as in from 2012 to till date, it's more than almost 13,700 crore plus. So almost 888 companies have raised 13,700 crore plus, and they have made sure to grow their revenue, grow the organization in much more well efficient manner. And if I talk about in 2023 itself, 4,300 crores plus have been raised till date, as an even a month is still late, so we are expecting the number to go higher. But yes, 43 crore plus funds have been raised. So by now, I hope you get a very good idea about what exactly SME IPO is. How does the SME IPO, what a company require to fulfill the criteria to launch their own IPO? What is the process that happens behind the scene, where you just see a link in any of the broking app that the SME IPO is open, right? There are many things that happen behind the screen for the launching the SME IPO. Okay. So now moving ahead, now I'm gonna make told you once again exactly the number of SME IPOs subscription in the past 2023. So basically, these are the top 10 performers, and certainly we are fortunate enough to be part of these 10. We four are our own IPOs, and if you'll see, one thing which I wanna highlight here is you should always remember, and you should also make people remember and aware about it. It's not only the times of subscription that matters, but also the issue size comparatively, right? If a 5 crore issue size is being subscribed almost like 100 times, so it goes to 500 crores, right? If the same thing 50 crore IPO is subscribed 10 times, so the total application amount goes to 500 crores. The amount seems same, but the number of times it gets subscribed gets different because of the issue size. So that's what we should always consider and keep in mind. This was the gist. Now, these are few are of IPO clients that we have did till now. Now, coming towards session end of my own personal session, I just want to say one thing that our Honorable Prime Minister Shri Narendra Modi has said. Our path is reforms, performance, and changes. As the world is changing, as our own traditional practice is changing now in such kind of a changing environment, it is time that we start advising and we look for a very different sort of method to raise funds and get the SME towards a very good growth trajectory where not only they can grow, but at the end, each and every individual associated to that organization grows. So by that, now I would like Sandeep sir to get involved, start with their own thing and do the check your readiness session. This would ultimately help you to tell that whether your client is ready for an SME IPO or not. Over to you, Sandeep ji.
Thank you, Aman. And this is the last slide that we have. We'll be ending the session shortly and we'll be open Q&A. So you can meanwhile start posting the questions that you have in the chat box while I just complete this slide. And I think Aman has very well, in a comprehensive manner and a precise manner, covered the various nitty-gritties that are part of the SME IPO. He has given us a good understanding of, or he's given us the checklist that we should have as professional with us to figure out which of our clients might be good candidates for IPO. And if we really want to advise them, help them with that process, we can see how that can be done using the knowledge that we gained during this session. Now, if we talk about this IPO readiness, it's not only about the company being eligible, the company being the market being open to the companies to come with IPO, but it is also more of a mindset change that needs to be brought in. The promoters, the founders of the companies, they need to be open for a mindset change, because when the company goes from a closed set of investors to a broad set of investors, there is a lot of compliances that comes in. There is a lot of governance that needs to be put in place, some of which has already been touched upon by Amit, so I will not take much time there. But broadly, if we want to check the readiness, would be those broad points that we should have in our mind. We should go and discuss with the client who wants to advise us on IPO. Is the stage in the company's development and the overall growth strategy and objectives of the company? Where is the company lying in its growth stage? It's in a company which is in a high growth stage. It's in a sector or an industry which is going to see a huge demand in the times to come. We all know that India is now putting a lot of focus on developing the manufacturing capabilities, and we are trying to be with the PLI and various schemes that the government is bringing in. We are trying to be very, very aggressive there. So when the manufacturing sector opens up, it is the SMEs that will benefit the most, because these are the entities which are a large contributor to the entire manufacturing space. So when that happens, we need to assess which are the kind of companies that would be in a position to get an active role in the growth story of manufacturing, which is the stage at which they are, and we need to bring in a plan for them. We need to sit with them and make sure that there's a proper plan, proper strategy on what do they want to achieve, and is IPO a real fit for them or not? Because that is the role that an advisor has to play very proactively. The founders should be aware that when you go public, there are a lot of regulatory requirements that you will be required to comply with in the initial stages, which is pre-IPO. You need to set your house in order, and also on an ongoing basis, there is constant compliance requirements because public gets involved. So to safeguard the interest of the investors, there are ongoing compliances that they need to do with. Cost involved in the initial process and ongoing. This is also an essential aspect that we as advisors need to educate the client, because IPO, the initial cost of the IPO is also a factor that needs to be considered, and we need to understand what would be the right size. Is that size meaningful for the cost that is involved? And also the cost benefit analysis of going with an IPO. I go for the IPO today, the costs are involved there. What are the kind of benefits that I'll get from the IPO? Will they outdo the cost that I'm going to incur over times to come? So that is another aspect where we as advisors can help the clients to assess the need for going in for an IPO. What type of investors may be interested in your company or sector? That's something we've seen in detail, couple of slides, that investors are quite interested to invest in right set of companies. So there's a robust demand, and perhaps we are in the right times. And so this is the time when good companies should actually look to go public if at all they want to go at a bigger stage, go want to grow with the growth in the economy. Finally, the eligibility criteria. These have been highlighted in a very detailed manner by Aman. So most of us by now know what are the basic eligibility criteria. They are not very stringent for SMEs as compared to the companies that go on main board, but yet there are certain eligibility criteria. So we need to make sure that the client meets those eligibility criteria. And once we are able to check this readiness, that's the time we need to start working on the process, because this process doesn't happen in a span of 2 days or few weeks. It takes several months at times to make the company ready. It might take even a year or so, because you need to work on a lot of aspects for the company to get prepared for the IPO. So I think this is the broad summary of whatever we have discussed so far, and I'm sure there'll be many questions that we would have got. In whatever time is left now, I'll open the floor for Q&A, and we'll take up maximum questions possible within the available time. So back to you, Asta.
Thank you, CA Sandeep Kothari sir and Aman Vadolia sir, for the insightful presentation. Your expertise and experience in this field are truly impressive, and we appreciate you sharing your knowledge with us. So it's time to open the floor of questions. So I will be asking questions on the behalf of the participant. So our first question is, in case of conversion of partnership into private limited company, the period of existence of partnership firm is also considered for determining 3-year period.
Aman, you're on mute.
Yeah. Am I audible now?
Yeah.
Yeah, so the period of existence of partnership firms or proprietorship firms or LLP is duly considered. Rasta, you're
Does
not audible.
general 25% corporate purpose include selling of promoter share? Am
No,
I audible
actually, what
now?
happens is promoter selling is called as not the fresh issue but offer for sale, and that does not include share. Whatever the funds that are going to get infused in the company, among that 20, up to only 25% could be used in the general corporate purpose. Apart from that, the funds goes for the personal project financing, the specific financing that is raised, and whatever issues that shares that are being done for offer for sale, that is basically the promoter is going to sell their shares. That money basically comes to the promoter's account or the shareholders bank.
Okay. And next question is, what is maximum EBITDA multiple is used for valuation of a company?
So there is no as such maximum EBITDA or PE ratio that gets involved for the valuation of the company. Like I told, there is all it all depends on case to case and how good the company is in every aspect, as in operation wise, financial wise, compliance wise, right? So there is no as such number that could be reached. But yeah, if I talk about the PE ratio that have been seen in the past for SME organization, that ranges somewhere between 8 to 15 on an average.
So also on the
Okay.
valuation part, as we saw, to get an indicator of what kind of multiple would be appropriate for the company that we are going to deal with, it also makes sense to look at the companies in the main board, which are in similar sector, and try to understand what kind of ratios they are commanding in the market. And over those ratios, as Aman had already highlighted, and there'll be discounting that comes into picture, because the kind of liquidity, kind of size of the main board companies is substantially more compared to what SME companies would command. So there will be discounting to that. But to get an very rough kind of an indication of what would be the multiple, that might be the right way to look at main board companies. And then maybe apply certain discounts there to get a sense of what would be the range of valuation.
SME shares are found to be illiquid on trading platform. Why so? Even their lot size is on higher side, which normally cost more than rupees 1 lakh per lot, which makes it very difficult or risky proportion to invest.
So as I already told you, there will anyways be challenges and considerations, right? And if I talk about the liquidity aspect, the market maker process, which I just explained in very much of a detail, for the first 3 years, that makes sure that the stock is liquid. And the sole reason that the application size is more than rupees 1 lakh, which I extremely tell that it would be somewhere around 1.20 lakh as per the regulations that have been prescribed by the exchange and the SEBI. So what happens is the bid is higher because earlier back in 2012 when all these things were happening, the exchange and SEBI had a mindset that the investors should, whosoever are the serious investors, should invest. So that was the sole reason. That's why the bid amount has been kept at a higher level compared to the main board level.
Okay. And the last question is why IPO? What is the significance?
Asta, you're not audible.
Am I audible? Am I audible now?
Yeah, you're audible now. Yeah, please go ahead.
Can you just repeat that question? Lost.
Why private placement or buyback is required before the IPO? What is the significance?
So basically, it is not a mandatory requirement. There is a thing called pre-IPO era in which capital is required to be restructured according to the eligibility conditions. So let's just suppose if the company's share capital as of before bringing out the IPO is somewhere around 24 or 24.5 CR, but the maximum post-issue paid-up capital is 25 crores. So they have to do a buyback in order to restructure the capital in a form by which the company could have a means to launch their IPO and satisfy the conditions that have been prescribed. There is no such as a mandate that is that the buyback or transfer or any sort of issue or private placement has to be done before bringing out the IPO.
Okay. There's one more question. Do underwriter also keep shares in demat account?
Yeah, each and every share, no, every share will be kept in the dematerialized form. If underwriter is subscribing to any shares, they have to purchase post the IPO period. Then those shares will also be in the demat form ultimately. Every security would be kept in a dematerialized form.
Okay, sir. Thank you for sharing your expertise with us today again. We appreciate your time and insight. I would like to thank our audience for their participation and engagement during the session. We hope the information presented here today you found it useful and informative. Before we conclude, we highly value your feedback to enhance our future sessions. I request everyone to kindly take a moment to fill out the feedback form. Once again, thank you everyone who are involved in making this series webinar a success. We look forward to seeing you at our next event. Have a great day. Thank you,
You.
sir. Thank you,
Thank
Thank you
you.
everyone.
so much. Thank you so much.